Hey, how's it going, guys? Just want to drop a very quick video to share with you guys a very exciting and potentially going to be an extremely profitable investment opportunity. And most importantly, this opportunity is still very early that not many people actually talk about it. And this opportunity is the uranium market. I've been watching the uranium market and some of the uranium miner stocks since October 2020. As you can see, uranium mining stocks have dramatically outperformed the S&P 500, and this major uranium bull run actually just gets started. There will be a lot of money to be made in this market over the next couple of years, or potentially the whole decade of 2020s. That's why in this video, I will share with you guys some of the main factors that are going to drive uranium prices a lot higher in the near future, and more importantly, how can we invest in this space? What are the stocks that we can buy right now as the retail investors? Alright, let's get started. Before we start, this video is brought to you by our today's sponsor, Interactive Brokers. Personally, I've been using Interactive Brokers for more than 8 years, and it's definitely a game changer for my entire trading and investing journey. If you're looking for a broker that has the lowest trading fees, lowest financing rates, and most importantly, if you wish to earn some nice passive extra income from the stocks you invest in, then Interactive Brokers is definitely the best one I would highly recommend. If my videos on this channel have helped you before, or if you got any values from this channel so far, please do me a favor and support this channel by just simply clicking the link in the description below. There's no sign up requirement, you don't need to register any account. All you need to do is just simply click the link below. Your help and the support means everything to this channel. Thanks so much, guys, and let's come back to the video. First of all, let's have a very quick overview on the important fundamentals of the uranium market. Just like any other commodities, the price of uranium is mainly driven by supply and demand. But there are three key things that you need to know that make uranium a very unique commodity to speculate and profit from. First, the total uranium market cap is extremely small. We're talking about only $0.7 billion. Just put this into perspective. In the same energy sector, the total market cap of oil and gas is $2.1 trillion. That is 3,000 times larger than the entire uranium market cap. This is important because with such a tiny market cap, it won't take a lot of capital to move the uranium price significantly higher, even with the retail investors' money. And the entire uranium market is extremely illiquid. And that makes the uranium miner stocks the perfect candidates for the retail crowds like Wall Street bets to create another potential gamma squeeze. I will elaborate more on this in the later part of this video. Alright, the second thing that makes the uranium market unique is that the cost of uranium is extremely low comparing to building a nuclear reactor facility, which costs billions of dollars. Ironically, that is actually a much bigger cost than the entire uranium market cap itself, which is less than $1 billion. So what it means is that even if there's a uranium supply shortage, those nuclear utility companies are forced to become the inflexible buyers, basically buying at whatever the price the market is asking for, just to keep their multi-billion-dollar nuclear reactor facilities active. For this reason, uranium buyers often do the multi-year contracts with those mining companies to secure their uranium supply at whatever the price those mining companies ask for, which gives those mining companies a very comfortable and predictable way to profit as much as possible. The third and pretty much the most important thing to understand about the uranium market is that the entire global uranium supply has two different layers. The base layer of supply comes from the uranium mining complex, which is easy to understand. But there's a second layer of supply that makes uranium really unique, which comes from disassembling those old nuclear bombs that were created many years ago. And here's the important part. Mining uranium is quite expensive. In order to cover the cost, those mining companies have to sell their physical uranium at least at $60 per unit just to break even. Right now, because the uranium price is so low, currently only traded around $30 to $40 per unit due to this secondary layer supply, in order to fulfill the multi-year contract, those mining companies actually buy this secondary uranium directly at the market price and then resell them to their nuclear utility customers. That's right, we're at this very weird moment where it is actually much cheaper for those miners to directly buy and resell uranium from this secondary market than to mine it at their own cost. So the key question now becomes, how much this secondary supply is there left? How long can this unique situation persist? Here's the good news for us as investors. The secondary supply for uranium is running out. And on the other hand, the demand for uranium is increasing. This is the chart of uranium supply and demand estimation over the next 15 years. As we can see, the uranium supply will peak by 2028 and start going down from 2029. This is because the secondary supply will officially run out by 2028 based on the current demand pace. On the demand side, because of the Global Carbon Neutral Initiative, uranium is going to play an extremely important and irreplaceable role in achieving net zero carbon emission, especially in the emerging market like China and India. Also, we are approaching the moment where most of the major nuclear utility companies in the US and Europe are running to the end of their long-term supply contracts and are looking at replacing them with the new ones. That is why we're seeing this significant estimated demand increase starting from 2028. So with this decreasing supply, plus the increasing demand, we're looking at a perfect storm that can create a massive uranium bull market, which is already starting to price in from now. Apart from this extreme imbalance between supply and demand as a long-term bullish driver, the uranium market also has one major short-term driver that could potentially push the price a lot higher over the next couple of months. And this short-term bullish driver is the Sprott Net Asset Value Premium Catalyst. And here's the easiest way to understand this. The full name of Sprott is called a Sprott Physical Uranium Trust, or SPUT. It is the largest closed-end fund that buys and holds physical uranium on behalf of investors. There is one extremely important thing about a closed-end fund is that, theoretically, SPUT's price should perfectly reflect the total current value of the underlying physical uranium that they own on behalf of their investors. We also call it the net asset value. However, because closed-ended funds are not traded on commodity exchanges, instead they are traded on the stock exchanges, which means their share price can fluctuate much higher or much lower relative to its underlying net asset value. When the price of the fund is traded lower than the net asset value, we call it the discount. It attracts more buyers when the fund is traded on discount because investors can have the same underlying asset exposure, like uranium in our case, with a cheaper price compared to buying physical uranium directly. But on the other hand, when the price of the fund is traded higher than the net asset value, we call it the premium. It attracts way much fewer buyers and it increases the selling pressure because no one wants to pay $35 for a $30 uranium unit. However, what is really interesting here is that SPUT, the largest uranium closed-end fund, does not want to be traded at a premium because that would make it less attractive for new investors. So, whenever SPUT is traded at a premium, which is right now, Sprott will issue new shares to buy more uranium. For example, most recently, on August 17th this year in 2021, Sprott announced they will issue $300 million in new shares to buy physical uranium at the market price for the remaining of 2021. Remember, the entire uranium market cap is only $700 million. A $300 million buying power pumping into this extremely small and illiquid market will definitely push the uranium price significantly higher. That is why we're saying that although Sprott only used less than 30% of their $300 million so far, uranium price already jumped from $30 to almost $40 in just 2 weeks. As we can see in this chart, uranium has actually already been in a bull market since early 2017, and this SPUT large purchase has just accelerated, created a strong breakout out of this 4-year uptrending channel. When the bull market is accelerating, it will attract more investors' attention with their capitals. Most of the investors do not directly own physical uranium. What they do is to buy the closed-end fund like Sprott to have the uranium exposure. With this increasing buying pressure from more and more investors, SPUT will soon be traded as premium again. With the additional premium, SPUT will issue even more shares to purchase even more physical uranium. This will inevitably drive the uranium price even higher, and the higher uranium price will attract even more new investors with their new capitals. Because the uranium market is very illiquid, over the short term, we could possibly see this perfect uptrending flywheel that is driven by SPUT's premium purchase, which can drive the price significantly higher. And on top of this extremely bullish uptrending flywheel setup, the uranium market is also recently being supported by the retail crowds like Wall Street Bets on Reddit. We all know what happened to GameStop and AMC when retail crowds loaded up on call options and created some epic gamma squeeze, drying up the liquidities. With the market cap at less than $1 billion, a strong interest from the retail crowds can also push up the price a lot higher and accelerate this flywheel even further. So overall, no matter if we're looking at the short term or long term, the uranium market is definitely setting up for a major bull run and giving us some of the greatest investment opportunities in our lifetime. Alright, before we go, I just want to quickly share with you guys how to play the uranium market as a retail investor. The best way to get uranium exposure is actually to buy the uranium mining companies. These are two of my favorites: Cameco, stock ticker CCJ, and the NextGen Energy, stock ticker NXE. Or if you don't want to invest in any individual companies, you can also buy the uranium miners ETF like URNM, which is also pretty good exposure. Of course, you can indirectly own the physical uranium by buying the closed-end funds like SPUT, but it's only available in the Canadian Stock Exchange. In the US, SPUT is traded on the OTC market with a different ticker as SRWF. For me personally, if you own CCJ, NXE, and the minor ETF like URNM, it will definitely be enough to gain a nice uranium exposure and then maximize your potential returns from this potential massive uranium supercycle. Alright, that will be the end of this video. Let me know in the comment section below if you are also looking at this pretty exciting uranium market. If you get any value out of this video, please do me a favor and turn on that notification bell so that you won't miss out any of my future videos like this to help you. Again, if you are new to this channel, my name is Vic. Thanks so much for watching guys, and I will talk to you guys soon. Bye for now.